Good morning everybody and welcome back to episode 162 of Enter Crypto, where twice a day I keep you informed and fully up to date on all things crypto. If that sounds like something you would be interested in, then go ahead and subscribe to the channel. I put out a new video every 12 hours. So today we're going to be talking about an article from CoinDesk's market section. It's titled "Bitcoin Primed to Rally to 56k as Nasdaq breaks out of bull flag." Chart analyst says. Analysts who correctly predicted the late 2020 bull run said that 2023 could be a surprisingly good year for both crypto and equities. So this is looks like it's going to be extremely optimistic. So let's jump in and comment along the way. Based on the first law of physics, an object in motion will continue in motion until an outside force affects it. Wall Street's champion trader Martin S. Schwartz wrote in his book Pitbull. Bitcoin has rallied nearly 50% in the first 7 weeks of the year, reaching a 6-month high of $24,900, with outside forces like the sentiment in traditional markets largely supportive. Recently, the crypto market and Wall Street's tech-heavy Nasdaq index have grown resilient to the Fed's angst and the resulting uptick in Treasury yields. It's important to know actually that Bitcoin is now sitting at 24,800, but only an hour ago it was like, I think it was $25,400, so it has been up and down like a yo-yo. I mean, today it's up 9%, even though it's gone back down again, it's still up 9%, so that's a lot. Like, that is a lot. So so we've gone back down now. Bitcoin is breaking out from a long basing formation. There is a saying, the bigger the base, the higher into space. William Noble, Director of Research at Emerging Assets Group and former analyst at Goldman Sachs and Morgan Stanley, told CoinDesk. Bitcoin may move from consolidation to another parabolic move back to 56k, Noble said, having correctly predicted the cryptocurrency's late 2020 surge from 20k to 40k. Going parabolic is an expression often used in the crypto market to describe an expected impulsive move higher with limited downticks. Now, just to put this, not to be a bit of a party pooper, but this is extremely bullish and optimistic. It is very unlikely that we are going to run straight from 24k now, 25k up to 56k. That is just a massive ask. Obviously, nobody knows the future, neither him nor me. So, can it happen? Yes, it is possible. Is it probable? No, not in the near future. I would even argue maybe not even this year. But I could be wrong. But it's a possibility, not a probability. But this guy's talking as if it's probable, like it's going to happen, and. That's you can't be sure about these things. It's really important to remember that nobody has a crystal ball, and a lot of these articles, maybe not this one in particular, but a lot of these going parabolic expressions and to the moon expressions and everything else, they are there to try and get engagement and to try and tap into people's optimism, because everybody's quite optimistic. When we see a big jump like this, retail especially, get very optimistic and can get a bit caught up in the FOMO, shall we say, and feel like they're missing out on the pump, and so they end up putting more money into it, and this gets everybody even more excited because then the price goes up even more, and then we get people writing articles like similar to this, as this Noble guy is putting, that we've already bottomed, that the market's bottomed, when in reality nobody really knows. What if the war in Ukraine starts taking a nuclear turn or something like that? I mean, you imagine what that's going to do to the markets. Imagine what it's going to do to the normal world. Everyone's going to go into panic for real. So imagine what that's going to do to markets. And if crypto continues to be correlated as it is to the S&P, then it's basically crypto is behaving like the S&P on steroids. So if that goes down in a massive shock, something like a nuclear threat in the war, then crypto is going to go super down. So bear that in mind. He doesn't know what's going to happen because nobody does. The widely tracked momentum indicator relative strength index has diverged bullishly on the weekly chart, confirming an end of the downtrend. That's the RSI. A bullish divergence of RSI occurs when the indicator does not reciprocate the new low on price, as observed in November 2022. That is a sign of bears losing power and bulls gaining strength. So what they are basically what he's trying to get at is when we've got, say, a new higher low, and then another new higher low, or a higher high, and then another higher high, but we've got the RSI behaving in the opposite direction, that would be a bearish pattern, because and vice versa. So we're talking about the opposite in this, actually. So that would be a bullish divergence, and it's where the RSI basically goes down, but the price chart is going up. So it's going to be it will be interesting to see what happens, but there are definitely no certainties. Nasdaq's bull flag. Another good news for crypto bulls is that the Nasdaq has broken out of a bull flag, a technical pattern known to accelerate an uptrend. Bitcoin's 90-day correlation coefficient with Nasdaq has increased to 0.75, indicating the two assets are moving in tandem. And that's because all risk-on assets behave very similarly. The Nasdaq, it's okay to talk about the correlation between the Nasdaq and Bitcoin or crypto, but they're also correlated with the S&P, the FTSE. Everything that is a risk-on is almost correlated. Gold is kind of seen as a risk-off asset because it's something that people jump into when they don't want to take risk. They jump into gold because it's sort of known as a stable thing and as a safe haven. So they are not correlated. Gold is not correlated with the S&P, or it's not with basically any of the markets. It does its own thing based on people's fear or greed. In the Nasdaq there is a bull flag. There is a saying, flags fly at half mast, meaning there could be another major run higher in equities to a new all-time high, Noble said. A bull flag forms when a correction follows an initial steep rise. An eventual breakout from the flag is said to confirm a resumption of the broader uptrend. Nasdaq fell by 37% in 11 months to October 2022. The decline, though severe, looked like a correction in the broader rally from March 2020 lows, and represented a flag pattern on the weekly chart that recently ended with a bullish breakout. Said differently, there could be a new bull market in stocks that looks like the last bull market. 2023 could be a surprisingly good year for both crypto and equities, Noble noted. Interestingly, Nasdaq's daily chart also shows a bull flag breakout, as popular analyst Declan Fallon noted. And then there's a potential breakout in Ether as well. And, if we sort of consider that Bitcoin is kind of the S&P on steroids, then you can really, Ether is kind of Bitcoin on steroids, and it goes further down. The further down you go down the list of the, top 10 or top 20 market, cryptocurrencies by market cap, they just get more and more wild as you go down until, you really are talking massive swings, like 100 and 200% intraday upswings. Sometimes, sometimes 400-500% I've seen on some in a day, in some of the, small caps. They are very, very high risk. I wouldn't advise anybody to get involved in those unless you are really, have money to spare and you can afford to lose that money. Ether, the second largest cryptocurrency by market value, is yet to break out of an expanding triangle identified by trend lines connecting January the 21st and February the 2nd highs and lows, registered on January the 25th and February 13th. Per Noble, a potential breakout might bring outside gains in Ethereum's native token. The expanding triangle in ETH is potentially very bullish. I saw formations like this in 2009, 2010, when stocks rallied post-global financial crisis. Noble said, pointing to the S&P 500's expanding triangle breakout of 2009. So there's the expanding triangle. So there's the article. I would always say, I know it sounds really sort of dull and boring, but just see this as just another article. Don't get optimistic. Don't invest. Never invest with you know, based on emotions or based on excitement or anything like. Investing should be, you know, you should be calculating all this. You know, it's a numbers game. It's not an emotional game. If anything, when you're trading, you are actually taking advantage of other people's excitement and other people's greed and fear. You're not getting involved emotionally yourself, because that's very dangerous. You just become like everybody else that's involved in the market, and those are the losers actually. You know, the winners are the ones that can separate their emotions from their, you know, trading strategy, basically. So a fun article, a positive article, an interesting article, but at the same time, you know, optimistically cautious. We can sort of sum that up in. That's what I've got for you this morning, guys. Don't forget to please subscribe to the channel, join my team, and I'll keep you updated on all things crypto every 12 hours. Smash the like button if you feel you got value from this video, and I'll see you all in 12 hours time.